In this video, I want to take you through and I want to teach you a strategy called the Christmas tree trading strategy. Now this is a cannonball trading strategy and I want to kind of outline it for you here, as you can see in this diagram, and I've got a nice little paragraph that explains what it is that we're doing here. So I'm just going to kind of read down through that here and stick with me for a minute, because we're going to go through and actually trade this in the real markets. And you're going to follow through with me the entire time that I trade this cannonball strategy, so you can see exactly how I do it first thing in the morning. So have you ever been really super good at picking the exact turning points of a market? I mean, like with 70 to 90% accuracy. No, very few of us are that good. Okay, so it's difficult to pick those types of locations when we're trading, right? I mean, to get the turning points perfectly, we oftentimes get stopped out because we're not very good at picking the turning points sometimes. It's for this reason that we created the Christmas tree strategy, where we continually dollar cost average into our entry position. If you would normally enter the market with 1,000 shares, consider entering with a much smaller share size at first, say 250 shares. Now, if you're doing this in the futures market and you get in with, let's say, maybe 10 contracts or 5 contracts, you would reduce that down to maybe 1 or 2 contracts initially, and then as the market moves against you, you can add on your positions, as you see here in the diagram. So if you would normally put on in the stock market, for example, 1,000 shares, then consider entering a much smaller share size at first, say 250 shares. Then if the market moves against you, add your additional shares until you've reached the max share size, or you hit your exit stop. And you put your exit stop at basically the normal or the same place as you normally would. It's just that you're not getting in with full share size. You're letting the market move against you, and then you can add on share size as the market moves against you, building your position. This is called dollar cost averaging, or we refer to it sometimes as cannonballing. In reality, the strategy can reduce your risk rather than increase your risk, since you're going to actually exit the strategy, if wrong, at basically the same exit price you normally would, but as the market moves against you, you're adding on shares at a more conservative level. When and if the market turns and moves in your favor, you have a better than expected entry point due to the fact that you were actually building an even larger position as the market was moving against you. This is called cannonballing, or dollar cost averaging, and it's a strategy that we generally discourage new traders attempting. And as you can see, the downside loss potential on this strategy can wipe out a small account if not managed properly. It's for this reason it's imperative that you only attempt this strategy when very well capitalized for the size of the market that you are trading, and make sure you have a solid exit strategy if you're completely wrong. Okay, let's switch over to the software, and this is Track and Trade, of course, and I've got 4 charts pulled up. And the thing that I probably didn't show, I got a little bit late, started late in the video, hitting the record, but I did a little bit of research before the market opened. I went over to bar chart, I ran a scan, looked to see what the biggest movers were, and you'll see that in here. I've got a watch list. And I picked up 4 markets, and these are the 4 big moving markets. They had the most volume and the most interest in these markets this morning. And so now I'm coming in here and I'm building myself a position, as you can see. And what I'm doing is I'm building my Christmas tree. Now I got in with the positions, and I'm anticipating this market pulled back a little bit. This is a big gap up market, as you can see. And I'm building my Christmas tree. Now the market's starting to rally here. And the first thing I want you to notice is that I'm using extremely small shares. And the reason I'm doing that in particular for this video is because we have a lot of people in our class who are afraid to pull the real money trigger. They are stuck in the world of paper trading, and they don't dare pull the trigger. They don't dare get in with real money. So I want to show you that you can actually do this strategy with very tiny share size. And so I'm using very tiny share size so that you can watch and see the strategy and how it works. And then based on your account balance and your risk tolerance, you can then increase these amounts, as you get better and better and more comfortable with trading, and you have more confidence in your strategy and more confidence in the market that you're trading, you can increase share size. And so I want you to look at this and say, okay, anybody can do this. I did a video one time called, They Laughed at Me When I Only Bought 1 Share. And it was a video that I was specifically trying to teach the concept of dollar cost averaging. And so that's what we're doing here, is we're dollar cost averaging. Now you can see in here what I'm doing is I'm building my Christmas tree. I'm actually in the market, and I've got 2 markets that I'm in, and I'm doing this with real small share. You can see my profit right now. I'm only up $1. So I'm not risking hardly anything. I got a $35,000 account, $33,000 account. And so this is a way for you to get your feet wet, and I just want to show you the concept and teach you that even if you have a very small, well, to do this type of trading, you have to have a, in the stock market, due to the pattern day trading rules, you have to have at least a $20,000 account, and more than that, because you can't fall below $20,000 if you lose a little bit of money. So you have to have $20,000 to do this. But the point of the matter is that I'm teaching the concept, and then you can scale it up depending on your comfort level. If you feel more comfortable doing, instead of 1 share, you could do 100 shares, and then you'd do 200 shares, and then 300 shares. So rather than trading $1 and then $2 and then $3 and $5, you'd be trading, $20 and then $50 and then $90 and then $100. So it's a big difference between how much money you're willing to risk and how much money you're going to make. It's risk versus reward ratio. But I wanted to do this demonstration today using real small share size and show you how to build Christmas tree patterns and Christmas trees and how to trade this strategy, so that those of you who are stuck in the world of paper trading will feel comfortable saying, hey, you know what? I can do this. If Lan would have just completely lost everything here, he'd have lost $20. And it was a great lesson, a great lesson to learn how to do this. And I'm going to practice, and I don't even have to take the risks he's taken. Maybe I could even do less than what he's doing. But right now I'm literally risking like $2. This is nothing. And so the concept is exactly the same, though, and I'm doing it on multiple charts simultaneously. I'm trading 3-4 charts all at once. You don't have to do that. You can just concentrate on one chart and focus in. And you'll notice that we kind of, once we get to a certain point here, this is an hour-long video, and I didn't do any recording during the video itself. I was concentrating on trading. I didn't sit there and try and narrate while I was trading. So this is me after the fact, kind of following through and showing you what I did after the fact. So I'm looking for other charts. I'm looking for some different markets, or I'm trying to scale my charts here and trying to decide how I want my charts on my screen. So I got rid of those charts, and so now I got 3 just side by side, and it looks like we're doing CLSK, SONM, and ACR. These are just 3 big moving markets that, the market moved really hard today on these 3 stocks, and so they had a lot of momentum and a lot of volume. I did a scan. Like I said, I went over to barchart.com, and this is not a promotion for Barchart. I don't have any relationship with them. I don't have any commissions from them. I don't own them. I don't have anything to do with Barchart. It just happens to be a free scanning service, which is really nice. I love Barchart. They're a great company. We work with them on a regular basis on a number of different ways, but I don't have any. If you went over and bought stuff from Barchart, I don't make any money. So I want to make sure that's clear. I'm not promoting them from an affiliate standpoint. This is just, they have a scanner, and I went and found the top momentum scans, and this is what we traded this morning on the gap up. So this is the morning break, and we're anticipating these markets, because they have a lot of excitement in the pre-market session, that they're going to continue to rip higher. This is, the gap and go strategy. The problem with the gap and go strategy is that markets will oftentimes, gaps were meant to be filled. So rather than gap and go, they gap and fail. And we get, and traditionally speaking, the markets, okay, now you saw me have an error in there. I tried to put a stop in there, and they don't let you. We're in the stock market, so you have to remember we have different rules. We have kind of funny rules in the stock market that we don't have in the futures market. And in the futures market, you can place any kind of order you want, but in the stock market, they don't let you do that. There's, that's because the rules were created by Nancy Pelosi and Chuck Schumer, not by real traders. The government gets in there and tries to regulate how you can trade and what they think they're going to do to protect you from yourself, when in reality, they end up hurting you. We don't have these kinds of funny, crazy pattern day trading rules and restrictions over in the futures market. It's a free society over there, and we can do whatever we want. Over here, we got lots of rules and restrictions, and so there's some things you can do. You can't have a whole bunch of orders on the screen. Your orders have to always match up with the quantity you're in the market. So you can't have a Christmas tree of limit orders and then also have a stop order. So you'll notice in here I don't have stop orders, but traditionally, and you'll notice in the slide, back when I showed you the slide, I had stop orders on the bottom side of this. So if the market actually goes cascading down through all my limit orders, it would stop me out. In the stock market, I can't do that. They don't let you do that. They don't let you build your Christmas tree and then put a stop at the bottom. And so in the futures market, we do that all the time. Over here, it just has to be a mental stop. Now, look at over here on CLSK. I'm building the Christmas tree. We're in the market long 10 positions, and the market's coming against me. And as it comes against me, I'm adding on additional positions. You can see I've got buy 3, buy 4, buy 5. And then over here, over in the ACB side, the market's actually moving in my favor. So we didn't get a build as large of a position. The market started to rip up and make money before we had a chance to build much of a position. So over here in Chesapeake Park, or Chan's Park, or whatever this stock is, the market's coming back against me, and so I'm still building my position, building my long position, adding on shares as the market comes against me. Now, if we were actually trading this with just a single entry and a single stop, we'd have been stopped out a dozen times by now, right? Trying to get into the market for a long position, anticipating a rise in price. We would get this green bar or whatever, and we'd be looking for an entry. We'd be getting in, and then we get stopped out. And then we get in, we get stopped out. And we get in, we get stopped out. And we'd end up with a whole bunch of losers at this point. As this market cascades back down against us, rather than getting stopped out and get in, stopped out, get in, stopped out, we're just continually adding on additional shares. This is called dollar cost averaging. And you'll notice as we add on an additional share, my entry line, as it's represented on the screen, starts to come lower and lower and lower with the market, because I'm dollar cost averaging it. And so I don't have to worry about the market going all the way back up to where I initially got in, because my dollar cost average brings my average entry price down. And you can see that represented on the screen. You know, the Track and Trade is a magic piece of software, allowing you to do this visually, dropping all of these Christmas tree orders on there, and being able to see where you're at with the quantities and what you're doing. You just really couldn't do this with a software package that's not visually representing it on the screen where all those orders are. And you'll watch as I go through, I start adding on and moving those orders in and up. You can come in here and see so far, okay, we closed out a whopping, 9 cents or something. So we basically got, but we're trading with very small share. And that was the whole point of this video, was to get you guys who are scared to pull the real money trigger, because every time in the demo account you get stopped out, you get stopped out, you get stopped out, and you feel like you're not ready to get into real money trading, you're going to become a much better trader when you get in with real money. When you start trading with real money, your whole psychology is going to change. And sometimes we wait too long. We wait too long to start trading with real money, and we never end up trading with real money. We get scared because in the demo account, you're never going to trade in the demo account the way that you're going to trade in the real money market with real money. You're going to always take risks and do silly things and crazy stuff. And so the very first time you go over and, okay, watch this. I tried to put a stop in there. Again, it's not letting me put a stop in. It's just the rule. So you have to have a mental stop when you trade over here in the stock market like this. In the futures market, you can put a real hard stop. But you know, as I was saying before, when you're trading in the demo account, you're never going to trade like you would with real money. You can practice all the strategies. You can get down the sequence of how you push the buttons and all that kind of stuff. But the actual, you know, taking the risk with real money, even in this case where we're down 58 cents. I want to show you, I am trading with a lot of orders here. I mean, look, I've got 2 markets running simultaneously. I got a third one over there that we just got, took a profit on, stopped out with a small profit. We're up 30 cents at this point, right? So we're not risking anything, but look at all the orders we got going, all the action we've got going. If you get comfortable with this and you get good at this, then all you do is increase the share size. So the point here is not to say, oh, Lance only made 30 cents. What's the point? The point is not how much money I'm making. It's the potential of how much money could be made when you're ready to step up to the bar and start increasing your share size. Now that will happen automatically for you. You don't have to say, well, you know, I've got me a $30,000 account. I think I'll just immediately start off with, you know, 1,000 shares and start, you know, 1,000 and that add on another 1,000 shares and add on 1,000 and add on 1,000. If you do that, you're going to get yourself blown up because you're not ready psychologically, mentally, and maybe even knowledge of the software and how the features and the software works in the software. Okay, here I'm turning on the bulls and bears because I got sick of looking at the candlestick colors. I want to know what the market was actually doing. We just got sell signals on all these markets, and you can see that I'm actually long at a buy signal. So I'm kind of sitting here going, oh, geez, these markets are not going to rip up like we were hoping to anticipate on these big gap ups. And generally, a big market will gap up like this, and then it'll continue to rally as people are excited about these markets and think that they've got a great catalyst, and the market will continue to rally. So in this case, what happened is these markets gapped up, and now everybody who bought the market through the pre-market session is selling off their positions and taking their profits. So I'm trying to decide whether I think people are actually taking shorts or if these are just profit takers. And I think for the most part, they're just profit takers at this point. So we're looking for a rebound and a rally and a turnaround. But as you can see, as the market continues to fall, this is a perfect example of what I'm talking about. You're going to obviously want to do this when you get buy signals and stuff, but I did this first thing in the morning, anticipation of a continuation of the uptrend. And we're just not getting what we expected. But this is a perfect example of what I'm trying to experiment or show you here with the Christmas tree. Now I wanted to look at the S&P. So I got the S&P over on my other monitor, and I drag that over here on the screen, and you can see the S&P is cascading down. It's falling. And all of these markets have a tendency, for the most part, to follow the S&P. If the S&P is falling, then most of these markets are going to fall too. If the S&P rallies and takes off and runs high, then most of these markets are going to take off and run high as well. They're pretty reliant on the S&P. So I'm always got the S&P on my other screen watching the S&P and what's going on. And so as the S&P is falling, then these markets are falling too. A lot of, that raises the question, why don't we just trade the S&P then? Well, you can do that. And when we trade in the futures market, for the most part, the S&P, the Russell, the Dow, when we're day trading, those are mostly the markets, and the NASDAQ, those are the markets, the mini markets that we trade over there. And those are really great markets. But they're, we got the mini micros now, which are awesome. And if you guys want to trade the mini micros, you can do this strategy on the mini micros with a relatively small account. Not as small as in stocks. I mean, in stocks, we're playing with pennies here, literally pennies. And so you can get your feet wet, you can get comfortable, you're trading real money. But if you just totally get wiped out in the market, you just cascade all the way down, all the way back, and you just decide to pull the ripcord, well, you might lose $10. And that's not going to hurt you. And you're learning. It's an educational experience. This is called Trade Mentors for a reason. Commodity trading school. We're a school. We're learning here. I'm not trying to show off and say, look at how much money I made today. I made $10,000 in 2 minutes. That's not what we're doing here. This is a school. We're learning. We're trying to understand how this works and how we can do this too. Eventually, you're going to be able to increase your share size, and you can say, oh, you know what? I'm making a lot of money. Okay, we're looking back at the S&P again. I'm showing you the S&P's hesitated on its way down, so it's having a little hesitation. Maybe we're getting a little rally on the S&P here. So that's the whole idea here, is that we're trying to anticipate what's going on in the markets, and then if we're wrong, we just keep adding on. And notice when I add on, okay, over here at CLSK, it just keeps dropping and dropping, and it keeps hitting my Christmas tree limit orders, and I'll suck that little limit order up in there a little bit tighter sometimes. I build my Christmas tree down there, and as you can see, I've got all my limit orders, and as the market comes down, I keep adding on. But look, the market is just like cascading down against me at this point, and I'm just keep adding on more positions as the market comes down, and this is really, this is really bad. I mean, I shouldn't be having to do it to this level. I should have had a better entry, right? But the market is a great example. I mean, oh my gosh, this is perfect education. And you can see what's happening, and as I add on more positions, the market continues to come down. Look at this other one, this Sony and technology. I'm looking at the S&P, and the S&P is just dying. It's cascading down. But we're down how much? I'm down $8. So it's not going to kill me. Because I'm trading small share size, and I just keep adding on, and as long as I'm well capitalized for the size of the market. Look, these are very small markets, $1.49 a share. The big one over here is Aurora Cannabis. That one was $18 a share. That's our big market, and I was very cautious and careful over there. I didn't want to be too aggressive on that market. But this market over here only has $1.49 a share, so we can be a lot more aggressive. And then of course over here on the Chesapeake Park, it's $2.50 a share share, $2 a share. So again, very small markets. We can, practice with larger share size and not feel like we're risking the entire bank on here, just practicing and learning how to trade the Christmas tree strategy. Hopefully we'd have a better entry point on this. Sometimes the problem is, you start off with the Christmas tree strategy, and the idea is that you start off with a small share amount, and as the market moves against you, you add in more shares. Usually we'll get in with a large share size, say 1,000 shares, and then expect the market to rip up higher immediately as soon as we buy our 1,000 shares. And then we put a stop very close to our our entry point, and we just keep getting stopped out until finally, the market rips off in your favor and you make a bunch of money and, cut your losers short, let your winners run, and your winners pay for your losers. Well, in this case, we're doing kind of the opposite strategy. We realize, hey, I'm not really good at picking the exact entry location. Hopefully you're better than what we are today. Hopefully you'll wait for an actual buy signal as opposed to getting in long on a sell signal. But nonetheless, the point is that if we get in on a bad situation like this, we can build ourselves a larger position as the market moves against us rather than stopping out. So we didn't get in with full size. We got in with a very small size, and then as we're wrong and the market moves against us, we can start adding on our additional size. And eventually, even if the market just makes a micro pullback and bounces above our entry point, if we're nervous and worried and scared, we can just kind of, we can take our position off the table, and we don't make any money, but we don't lose any money either. Because each time we enter on or add on with the limit order, you'll notice that the dollar cost average or our entry price drops down. And so that's why as I move further and further away from the market, I add larger and larger share sizes. So you see here I've got 32 shares, and then I dropped in 40 shares. Over here on this market I got 17, and then we go 21, and then I got like 26, and so I'm adding larger shares. So in here I got like 32, 40, and now I've got 50. So if the market keeps dropping down, it's going to pull that dollar cost average down. And again, because I'm well capitalized for the size of the markets I'm trading, we're down $20 at this point, and we closed out 36 cents in profit. And that's because we're building a position. We're building a position, right, as the market comes back. And eventually this thing, our hope is, of course, is that it turns and starts to rally once again. And as it rallies, we can start taking some profits off. So now you can see I'm moving and adjusting my limit orders. I'm bringing them up closer and closer. And as one gets filled, I kind of fill in the gaps and bring them up, and then each time one of those limit orders gets filled, it pulls my dollar cost average entry point closer and closer to the current market. So the market doesn't have to move nearly as far to get into the money. Okay, so we just got into Aurora Cannabis. It started to rally, so I took a position, and notice I only took a position with 5 shares. 5 shares on a $15 stock. It's nothing. So we're not risking a whole lot. Look, we're down 39 cents. 39 cents is not going to kill you if you just suddenly decide, I'm scared and I don't know what I'm doing, and I ripped the cord out and I lost 39 cents. It's not going to hurt you. Okay, so the whole point is to learn and practice with real money. Do the things that you're going to be doing when you have larger share size. You just do it with smaller share size. And as you feel more comfortable and you get more proficient at this strategy, then you can start adding on larger share sizes and trading larger markets. But this is this is Trade Mentors, and so we are learning, we're practicing, we're using small share size, little tiny share size in little tiny markets, just so we can get the strategy under our belt and understand how to trade this strategy. I really love this strategy. This is a great strategy. Now I use it in very many combinations of things. I have a strategy called I call the Cat's Meow. I have one called the King Tut. Of course, the Christmas Tree. We have one called I've got the Quarterback Sneak. I've got all kinds of strategies. The Triple 29, and it's just different ways of managing our position. This is called risk and money management. So oftentimes when people are learning how to trade, they hear people say, the biggest part of trading is risk and money management. Trading your risk skills and your money management skills is the biggest part of trading, but people don't know what that means. This is what that means, managing your risk. Okay, so we're making money over here. Over here on Chesapeake Inc., we got the market started to rally in our favor, and we're putting the limit orders in. Now we're putting in Christmas trees in there, and we're adding in all the limit orders. And as you can see, I'm killing the ones that were a long ways away for our initial entry. And we're making money over here on Aurora Cannabis, too. It started to rally. Now, the sad thing about Aurora Cannabis is we got a better entry. Doggone it. It didn't pull back against us and give us a very big entry. So we're going up with only 5 shares of Aurora Cannabis, when if it would have pulled back against us, we could have a bigger a bigger share size, and then when the market rips up and starts to rally, we'd have a lot more money in there and have a better original entry location or dollar cost average entry. So this is the downside of this. Sometimes you're really, you're really good at picking the entry point. You get in with a smaller share size and the market immediately rips up. And so then you don't have your full share size and you're not making nearly as much money as you would had you done the full share size. So there are some downside risks of trading this, for both the profit side and for the building your position on the downside. So as you can see, we're up on the Aurora Cannabis. I'm going to start taking some profits off the table. You can see I'm starting to put my limit orders in there, building the upside. Beelzebub's breath is what I call that, the devil's breath. Usually when we're taking short positions over in the futures market, I don't do that over here because this is actually an account that I can't take short positions in. It's a money market account, or an IRA. It's a tax deferred account. So again, more rules that they throw at you over here in the stock market that we don't have in the futures market. I'm in an IRA account, so I can't take short positions. So if you I call this the Christmas tree because we're entering with lots of green orders, and then if you do it on the short side, I call it the devil's breath, because if you think about taking short positions, the situation that we have when we're taking short positions is that you have unlimited risk, right? Because the market can go, there's no telling how high the market can go. It can go up forever. And so if the market just keeps going up, and you're short, there's no top. Okay, so it's the devil's breath. You're playing with the devil. I mean, if the market goes all the way to the bottom, now look, I tried to put a stop in there, and again, I come from the futures market where we can do that, but here they're not going to let me do it. I can't put a stop at break even. I was trying to put a stop at break even on Chesapeake Inc. there, and so if it came back against me, it was just going to stop me out, and I was going to toss this stupid stock in the garbage because it's a worthless bum stock. It's not going up for us. So we want it to rip up. We want to, have a better opportunity for this thing to go up. Obviously, these are not very good markets. I keep watching the S&P, and the S&P just keeps falling. So now at this point, I'm like, well, we're only in with 62 shares. I'm only down, I'm up $2. So, but I don't want to focus on the amount of money that we're trading here. I want to focus on the concept. The dollar amounts will come. I mean, if we were trading just multiplied by 10 of each one of these, we'd be up $60, and that's respectable, considering that you're building your position and you're trying to grow larger. I'm looking at the S&P again to see what the S&P was doing. And if you had, 100 shares in each one of these and you were building these up in 100, instead of $60 or $6 or $60, you'd be up $600. So it's all in the amount of capital you've got, the ability that you've got to build your position size, your personal risk tolerance. And if your risk tolerance is down here at this level, there's nothing wrong with that. I don't want, people just feel like, oh, I can't tell anybody that I'm only trading one share. No, trade one share. Get in there, trade real money, even if it's one share on a dollar stock, just so you can get the experience of trading real money and stop playing over in the silly demo video. I mean, in the demo account is for one purpose. It's to help you learn how to execute the strategies and to learn the software. But once you know how to execute the strategies and you know how to run the software, get out of that demo account. It's not doing you any favors. It's not doing you any good. Get over here and start trading with $1 shares and trading one share. Even if it's all it is $5, you're going to be a totally different type of trader when you start trading with real money, even if it's only, penny shares. You don't want to go down and do penny stocks. I wouldn't recommend you do anything below, $2 is kind of getting really, I mean, we're at $1.50 share. This is really low here on $1.50 stock. Anything below $1, you start to not. You want to be looking at stocks that are between $2 and $10 is generally the best place for these small cap stocks to trade this type of strategy. Now you get up into the bigger markets. Of course, you can trade this same strategy on Apple if you wanted to. The Apple, it's a much bigger share size, $200-300 per share. So the risk tolerance is a lot different. Plus the market doesn't, rip up $200-400 in one day, or 200 or 400% in one day, like these little small caps can do. So the profit potential is not quite as big, and the risk is larger. So you have to you have to take all that into consideration. So to get started, I would recommend here in the stock market in particular, you kind of stick to these small cap stocks and, kind of watch and see what they're doing and trade somewhere between $2 and $10, and then trade these small share amounts to get started. And then when you feel comfortable, you can start increasing your share size. Okay, now I'm coming in here, and what are we doing here? Oh, I'm going to start trailing the blue light system. Well, I wanted to show you that, I got a strategy called the cat's meow, and it's kind of a combination of the Christmas tree, and then we have what we call the triple 29, where we have the blue light system. Oh, what I'm doing was I was attaching a stop to the blue light for entry. So the crossing, all of you know who follow me, you know that the blue light crossovers are great locations for entry. Now, to me, the problem is I'm looking at the S&P again. What the heck is going on with the S&P? It looks like we kind of stalled out down here at the bottom. Maybe we'll start for a rally on the S&P, big pullback. But what I've done here is, this to me is, oh, look, I'm pointing that. Look, we got a long set of dots, a short set of dots. We got the small dots underneath. See that blue dot right there? The market crosses below that. That's a sell signal. So we've obviously got the big sell signal from the bulls and bears up higher, and this market's been cascading down from that. And then if it breaks that blue light, that's an additional sell signal. So this market is just taking back everything that it gave during the pre-market session. It's just gaps were meant to be filled, and the dumb thing's starting to cascade down. So, it's obviously not a very good day for these types of markets, as the market's cascading down instead of, gapping up and running higher like we oftentimes expect them to do. So, but what I'm looking for is, well, the market's going to pull back, and then it'll turn and start to rally once again. So now we're getting that over here in the Chesapeake area. It was Chesapeake Park. We're up, $6 it looks like. Woohoo! But that's not, again, don't focus on the dollar amount. Focus on the strategy. What have we been doing here? We've been building our position as the market comes against us. Now as the market turns and starts to rally, look at where our entry is. Because we are dollar cost averaging in, we don't have to wait for the market to rally all the way back up really super high to where we got in, clear up there at the top of the market. We've been dollar cost averaging in, and that pulls that entry location closer and closer and just follows and trails down behind the market. That way when it turns and starts to rally, we've got a great entry. Look at how much better entry position we are now than where we were before. And we didn't enter with all full position at the beginning. We entered with a very small position and build our position as the market came against us. Now I'm looking at the volume. I'm like, why in the heck are none of these markets moving? Is there nobody participating? But look, we got 1.1 million over here on Aurora Cannabis. We've got 204,000, which is much smaller, but 204,000 in Sonoma. And then we got 1.4 million over here in Chesapeake. So why are these things not, busting out and moving around and giving us some big trends like we want? But nonetheless, that's kind of what I'm looking at. So now I'm coming in here. I go, okay, I'm making some money over here on Chesapeake, or is that Clean Spark? So I'm dragging my limit orders in. See that? See how I'm dragging those down? I'm starting to take some profits. So I'm dragging those limit orders in and saying, well, I'm going to take some money off the table if this thing will give it to me. Now it's starting to pull back against me. At this point, I'm like, nah, I'm going to kill that whole thing. We're out. Chesapeake, sorry. I just took my profits. I hit exit chart and liquidated the whole thing. I was afraid that thing started to cascade down against me. Even though we just got a buy signal, but nonetheless, I was, this market's just not been very friendly for me this morning, and so I didn't want to give up the profit that we had made, and so we closed out, $11 so far. So we're up $11. Again, don't focus on the dollar amount. Focus on the strategy that made us the money. So if we had been doing, these quantities times 10, that would have been 100 and, 100 and we'd be up over $100 right now. So think about it like that. And we got a $32,000 account here. So we're well capitalized for what we're doing here, and we're not taking big risks. So, as you get more comfortable doing the smaller share size and the smaller amounts, and you say, hey, this thing's actually working for me. I can do this. I've been doing this for 2 months now, and I've very few losing days, and I'm doing really good and feeling comfortable with it. You can start to increase your share size, do larger and larger share size, and build your account over time. This is not a get-rich-quick scheme. This is building account, learning the strategies, and this is just one strategy. This is just the Christmas tree. Like I mentioned before, we got a lot more strategies. We can come in here and start trailing on blue light systems. We can do crossovers. We can do the Fibonacci numbers, and we can read those things and do all the math calculations and all that fun stuff that we talk about at Trade Mentors and in those courses. And if you're not in those courses, then, of course, write me an email, lhturner@tradementors.com. Let's get you into the courses so you can learn how to do this. Of course, the software is very key to being able to trade like this. You really can't trade like this unless you have a software program like Track and Trade that gives you the visual representation of where your Christmas tree's at. Most trading platforms are not really trading platforms. They're just order entry platforms. And so you can't build Christmas trees. You can't put all these orders in and stack them like this and see them visually represented where they're at in the market. You can't drag them and drop them and move them with all these other, order. Again, it makes all the difference in the world. What type of trader do you want to be? Okay, we're going to look at quick S&P. The S&P is starting to rip up now. So why are these markets not ripping up? They should be rallying for us, and they're not. So this is disconcerting to me. I'm like, why are these markets not rallying? The S&P is jumping and running. These things should be jumping and running too, and they're being lazy. So I'm not real happy with the three markets that we chose this morning. So anyway, the point I was making is that the software platform is key to your success. I mean, what type of a trader do you want to be? Do you want to be a professional trader? You want to trade for a living? You want to make money doing this every day and try and make money? Or are you just a passive trader where you just want to buy an option, or buy 100 shares or something of Apple every month or two? If that's all you really want to do, and you don't want to dedicate yourself to being a trader, and you just want to buy an option, or once a month or a couple times a month, or you're just trying to do a simple stock market savings plan where you're just going to buy a share or two here of Apple every now and again because you feel like Apple might be a good company, this is not your platform. You obviously don't need something to this degree, to this level. This is a professional level, live trading platform designed for active traders. If this is what you want to do, if this is the kind of trading you want to do, you can't do this with something like TD Ameritrade's order entry platform. Most brokerage platforms are nothing more. They got a few charts and they got an order entry point. That's it. I can enter an order and I can hit a market order, I can hit a sell order, I can put a limit and stop order in. But you can't visually represent them on the screen. You can't put like 20 of them on the screen simultaneously and drag them to new locations. Look at how I'm building this up. You just can't do this in other programs. You have to have a trading platform designed to trade with these strategies. So, get the right tools for your job. I mean, if you're not going to do this type of job, you don't need this tool, obviously. If this is not the type of trading you want to do, you don't need this tool. But if you're going to be serious about trading and you need a visual representation of how markets are moving through price and time in relationship to your orders, you need to have a tool that does that. I mean, I don't know how I can emphasize that anymore. I've been doing this for 25 years, and you just can't do it with something that doesn't visual represent. Look how easy I'm moving all these orders. I'm just moving them on the screen and dragging them around and putting them where I want them. You can't do that with just an order entry platform. All right, so what have we got going here? This is Sunan again, and we're kind of building position. What are we up? $1? We're up $2 on this thing. We've got 250 positions long, and we're up $2. So you can see, again, 250 shares, and we're only up $2. We're only risking $2 here, $4, $5, $20. We're not really taking a huge risk on the market. And again, I don't want you to focus on the dollar amount of these trades. I want you to focus on what it is I'm doing. The dollar amounts will always increase. You can increase the dollar amounts as you feel more comfortable with the strategy. So, okay, we're going to slide this thing over. We're going to watch and see if the market continues to fall against us. I've still got limit orders to add on additional positions, but we're up $6.50 right now, $6.50. I got a sell 50 limit in there. I'm getting a little nervous. This market's really not ripping higher like I would like. It's really being lazy. So I'm like, well, let's start reducing our positions and start taking some profits off the table. So that's why I've got a big one in there at 50. I take 50 positions off, or 50 shares off of my total of 250. So that's a big share size to be taking off right there, that close to the market. But it's because this is such a wimpy market. I did just get a buy signal from the bulls and bears. No, but the sad thing is the S&P is starting to fall down again. That's a bearish pattern on the S&P. So again, I'm not anticipating that this is going to be a strong bull pattern right here. The market's falling back below our break even. You can see we're down 96 cents now. Now we're back up $1.29. So you can see as we're going back and forth across the line of scrimmage here, We're not risking huge dollar amounts. Again, I just want you to focus on the strategy. You can increase share size as you feel more comfortable with what we're doing. And notice I'm pulling the limit order up closer. So if the market does drop down, I'm going to add on some additional positions here. So if the market, I'm looking for this little ABC pattern, right? The market rallies up, pulls back, and then I'll anticipate another rally up. If it pulls back below my entry point, I don't want to stop out because I've got a buy signal. I'm looking for this market to rally, and I've got 250 shares now. So I'm building my position. I don't want to be jumping out of it immediately as soon as the market starts to rally in my favor. But I do want to take some profits off the table. I want to start to reduce my overall outlay on this market because it's just being so weak and wimpy. It's not moving for us. The markets are just dead this morning. Just slow, not doing anything, not moving. And I don't want them to be really crazy. I don't want them to be ripping all over the place because that's difficult too. Look over here at Aurora Cannabis. I'm just watching that one, waiting for it to bottom out too. Looking at the S&P again, it's rallying, so the market's going up. How come these markets are not following? Usually they'll follow. If the market rallies on the S&P, then these markets will rally too. But look at Aurora Cannabis. It's just cascading down. So it was no good this morning. It gapped up big, and then everybody's just taking their profits from the gap, which is really common. We see that a lot. But, here in a minute, I do remember I went through and started looking through the watch list again, trying to find something else that was moving and maybe had some better momentum behind it. But I just picked poorly today. Okay, get rid of that stock. That was worthless. We had no luck with that one. Okay, I've dragged the Sonum over here. This is our primary stock we're trading. So I kind of landed on this stock. This is the one I'm watching. And, sometimes you pick the wrong stock for the day. It just doesn't work out to where it makes you a bunch of money. But hey, it is what it is. You don't make the best choices every day. We had four or five or six stocks that we were looking at, and out of the 4 or 5 or 6, none of them really moved. I mean, we made a little bit on Aurora Cannabis, but you can see it's just kind of a dead sideways market. Okay, I'm over here in the watch list now, trying to see what else is out here. What the heck is going on? XTNT. Now that was the top yapper, but look, it was like over 200% increase. It kept up giant, and I don't generally like to trade those. Look, it's been halt every time it's moving. It's halting because it's just too active. Nobody can trade that dumb thing. It's just one halt right after another. Halt. So throw that dumb thing out. We're not going to try and trade that one. So oftentimes the biggest huge gappers, when they have those giant gaps like that, you can't trade them anyway. So just don't even try. Just throw those away. Those are not ones you want to watch because generally the market is, it's too wild and crazy, and all it's going to do is it's just going to halt the whole time. So now we want to get with stocks that have a nice catalyst, and it's the catalyst that's going to drive these things up and down. And we have nice news reports. And of course, pre-market, I'm up at 7 o'clock in the morning. The market doesn't open till 7:30. So for the first half an hour of the day, we're looking at the markets and trying to decide what we want to trade. And we're looking at the scanners, and we're looking at the news, and we're seeing and these were kind of the 4 markets that kind of gave me the impression that we might get some movement out of them. So I'm a little disappointed in them today. But, the whole idea is we're building a position as the market falls back against us. And then if the market starts to rally and starts ripping up, then that's where we have a larger and larger position and can start making more and more money. And it doesn't have to move very far if you're, depending on share size. It's all share size. And right now we're just learning. We're in tradementors.com. We're practicing with small share size, small accounts. So we don't have to feel like we're risking the farm. Oftentimes I'll wait till the first 30 minutes of the market is over. And you'll notice that oftentimes this is a pretty common pattern here where you have a gap up and then the market pulls back. A lot of people will buy during the pre-market session, which causes these big morning gaps. And then gaps are meant to be filled, so markets will pull back, and as soon as people are starting to take their profits off and the market opens, it's kind of, it goes both ways. Sometimes you have that gap and go, or what I call the jump and run, where the market will jump up and then run and take off higher because everybody's excited about this stock. And on the open, it takes off higher. And so you start looking to build your positions to get into a higher position, a higher market. But then, of course, you have these types of situations where the market just kind of breaks and comes back against you and starts filling the gap. People just want to take profits from their nighttime or from their overnight session. Okay, here we are. We're going a little bit long, but this has been such a wimpy market, and I've not been real happy with it. It's starting to move in our favor. I'm starting to drag in some sell positions. You can see we're long about 150 shares on this one, and I'm taking in some limit orders with 10 shares. So I'm just taking some quick profits off there. I'm bringing in one for 50 shares. I just want to reduce my load a little bit on this thing. It's been such a weak market, so I'm waiting for it to give me some profits, and I'm going to reduce some of my risk on it. What are we up? We're up $17 so far, $18 so far. So far we haven't closed out a loser yet. We're still perfectly green on the day. Nothing's really huge, but again, don't think about dollar size. Think about position sizing and what we're doing. We're not dealing with huge amounts of money. We're dealing with small amounts of money. And as far as the small amount of money that we're dealing with, hey, we're making good money. You know, the amount of money that we've put out to risk versus how much money we've made, percentage-wise, hey, we're making good money. So, you know, you can think about it in multiple ways. And now you see how I'm pulling the limit down? I pull the limit down. You couldn't do that in any other platform. Track and Trade is the only platform I know of that you can really do that. You put the order in, and then you drag it to your location that you want. And each time you drag it and release the mouse, it sends the new position to the market. So you're immediately moving your position, just bang, 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 that fast. And so there we just got filled. Okay, so we just took some more profits. Now we're up $23. So now I'm coming in here, putting in my quantity. What quantity do I want? I'm going to take another 30 shares off. If this market will just give it to me. We got 130 shares, and so I'm taking 30 of the 100 off is what I'm trying to do. Oh, now it's cascading back down against us. Trying to get it to give me that 30 shares. Come on, with the limit order, it needs to just pop up and give me the 30 shares. And a limit order, remember, the reason we like to trade these types of strategies with limit orders is because the market has to give you the price you specify or better. If you're using stop orders or, or market orders, you can get a lot of slippage. You're not going to get what you ask for. And there we just took 30 shares off right at basically at the break-even point. So now we're up $25. We got a whole whopping $25 after sitting here for an hour. But, hey, $25 an hour. A lot of people go to work for less. A lot of people go work an hourly job for less money than $25 an hour. And we're just playing with penny shares. We're not even, very small quantities here. So we can ratchet it up once we feel more confident and comfortable with our strategy and what we're doing. But I want an example for you guys who are stuck in your demo accounts and don't feel like you can get out. This is how you get out. You start trading very small share size. Look, we're risking like 30 cents. Okay? It's not going to hurt you. If it is, you shouldn't be doing this anyway. All right. So here we go. We're just still waiting for this market to move. Now look at the blue lights. The blue lights from the bulls and bears. We got a bull signal. The market, it's just, what a worthless market. Oh my gosh. I can't believe how awful this thing is. So what are we doing? Okay, well, we're going to throw some limit orders in there and dollar cost average in, bring this thing down so we can eventually, hopefully this thing will rally enough that we can at least get out without losing our shorts. Now, we're not too bad. We were able to peel some off, reduce some of our risk, right? So we only have 190 shares long at this point. We're watching over here at Aurora Cannabis to see if it's going to give us anything. It's not breaking anything. We just got a buy signal from the bulls and bears, but the bulls and bears blue light's still underneath, and it's just dead. Look how it's just going sideways. It's just a basing market. It's not doing anything. So now our little Santa Technologies, we're looking at the S&P. Look, the S&P is rallying. It's taken off. Why is this stupid Snantha just keep dropping? What a worthless stock. What a piece of crap. We're trading a horrible stock here. So I think we're doing a bang-up fantastic job while trading such a worthless stock. And, we're up $25 so far. We haven't taken a losing trade yet. Now I'm going to add on. Notice I'm building the Christmas tree back up again. This market keeps coming back against me. Now notice that this is actually, to me, the blue light crossover. We got a long set of dots. We got the counter trend, which is the short set of dots. The thing just crossed over the blue set of dots. That's to me is a sell signal, and the market should cascade down again. So what I'm going to do here is I'm just going to try and build a position back up and get out of this thing. I don't want to lose money, so I'm going to build my position. I'm not got a big risk on. So, because we're well capitalized for the size of the market that we're trading, if it comes down and hits a couple of these, add another 30 shares, another 35 shares, another 40 shares, another 45 shares. As that market comes down, it'll keep drawing that dollar cost average, our average entry price down. And then when the market does pop and move back up, if I just want to finally get out of this piece of crap market, I can just put my stop limit at where I'm, just above the entry and get out. And that's what I'm looking to do right now. As we come down and start to wind this video down, we're trying to, preserve ourselves a little bit here. We got our $25. And if this market cascades down all the way down, of course, we can't put a stop in. It's a mental stop. But how much further down? We have to start asking ourselves, at what point would I get out of this market as it continues to cascade down? Now, we're at a sell signal right here. Crossing those blue lights, this market will probably, I'm anticipating that it's going to cascade down. So we're coming over here. We're saying, isn't there another market we can look at? Oh, my gosh, what a bunch of crappy markets this morning. And I look at this one and I'm like, oh, well, look at that one. I'm just looking at the daily bar and it's at the bottom of the range. So what a worthless stock. Let's look at a different one. Here's Clarence Park again, Clean Spark. It's not doing anything. So, we're just kind of waiting for something, technologies to do something. And while I'm looking around, I'm looking for something else that we can trade. Oh, look, now I find something. Kidman Holdings. There's one that was in our list, in our watch list. Had we chosen this one, it would have been a much better stock to trade. Let's get rid of these other pieces of crappy markets, and let's start watching, Kidman Holdings over here. And it's been a much better stock. Had we been trading that one this morning, we'd be rich, rich, rich beyond our wildest dreams. But no, we didn't pick that one. We picked the wrong one, and that happens sometimes. But sometimes, you do this every day. You're going to pick the right stock and rips up and makes you all kinds of money. And that's what you want, right? You just, sometimes it's hit and miss. I oftentimes say that trading is like fishing. You're going to throw your hook in the line, throw your hook and bait in the water and wait for the fish to take off. Sometimes you catch small fish. Sometimes you catch huge whoppers. But all in all, the whole name of the game is to do your very best not to lose your bait. Sometimes that happens too, and you get stopped out with a loss. Okay, we're down $2 right now. Again, the dollar amount's not killing us because we're well capitalized and we're not risking huge amounts. We're just trading, tradementors.com. We're just trying to learn. So now as we come in here, watch this. We're going to start saying, okay, I'm going to start. I put a full limit in there, 275 shares. I'm just like, let's get out of this piece of crap market. We'll go find something else to trade because it's just not playing for us today. And so I'm sucking my limits up in there. Watch, I got 35, 40, and 45 limits on there to add on in case the market does flash down off of this blue light crossover. And now I have to change my quantity for my stop. So I'm putting in my stop. Now notice how I do this. In the stock market, I can't put my stop in first and then delete the old one. I have to delete the old one first and then replace the new one. So I had to put the quantity in, 310, kill the old, not stop, but it's the limit, profit-taking limit to get me out of this market because I'm just sick of this market. I'm like, this is a worthless market. Let's get out of this thing. And so now I'm trying to build myself a position that can get me out of this market. So I got 310. As it flashes down and fills another limit order, I'll have to change the quantity again. Now in the stock market, in the futures market, I can just drop one in and kill the old one. In this one, I have to kill the old one first and then drop the new one in. It's just kind of in reverse. Again, the rules were created by people who don't trade, so we have to put up with their nonsense. So. And I don't like to stretch. A lot of guys you'll see like to stretch this chart out really huge. I mean, they'll have like 4 bars on the chart. And you're probably asking, Land, make it bigger. I can't see. How come you got the chart squeezed down so small? It's because for me in my brain, I want to see the size of these moves in relationship to the rest of the market. If you have that thing blowing up so big that you only have 4 bars on the chart, one tiny little tick in the market looks like a huge move. Oh my gosh, it moved 25% of this entire screen. And you get more anxious because the market's moving a lot. Oh my gosh, it's bouncing all over the whole screen. But that's because you're zoomed in so tight that everything looks like a giant move. But when you're zoomed out and you can see a more realistic view of the trend, you realize, oh, that's not a very big move. It just popped back against me. Okay, I'm down $11 now. Now I'm down $16, $12. This is a horrible drawdown, right? I mean, oh my gosh, we're down $14, but still, because we're dealing with small share size and we're well capitalized. And I just tried to do what I would do in the futures market. It won't let me, so I have to come in and do it in the stock market. So I'm putting in my limit. I just changed the quantity, 445 shares. I'm just trying to get out of this market. But as it continues to flash down against me, I want to bring it in closer and closer. So I keep adding on positions, which draws my position down. Now, if we were doing thousands of shares, this would be scaring me a little bit. So what I would do at this point, if I was up, you have to realize I'm not risking very much. I'm risking $10, $20. So I'm not scared at all about the amount of dollars. But if this was a large dollar amount, what I would do is I'd put a stop at, okay, we're up $25, right? So I would say once I lost half of that, so $12. Once I was down to a $12 loss on I'm down $26, $31 right now. But if I was trading larger share size, let's say this was $250, then once that got down to $125 in profit, I lost 50% of my value of my open profit. Then I'd pull the ripcord and say, okay, we're done. Let's get out. So I have to give a caveat here. This is where we would say, and in the futures market, I would have had a hard stop in there at $15, saying, you know what, I'm down. I've lost 50% of my open profit. I have to get out. I can't stay with this market any longer. And then I'd have to decide if I wanted to, with my $15 of profit, if I wanted to, or 150 or 1,500, depending on the quantity that we'd been trading for the day. I have to decide if I wanted to continue trading for the rest of the day or not. But we're down $41 against our $25 profit. So, we're down $36 now against our $25 profit. And I've added on, and we've come down and we broke the previous low. So this should hold in here is, kind of my thought. I'm not going to add on anymore. If I have to take a loss, then I take a loss, and, but I'm going to wait and hold it and see if it doesn't start to rally for me a little bit, bounce off this bottom point and come back up for me. I just want out of this market at this point. You can tell I'm a little frustrated to some degree. Oh, look at this. S&P. Just tanking, falling down horribly. So, that's kind of part of this problem too. This market follows didn't follow the S&P when it was rallying, but when the S&P tanks, it tanks too. So let's just keep watching and see what happens. We're coming back a little bit. We're building our position. We're only down $26. So if I liquidated the position right now and just cut it, I would be, I'd be underwater by $1 for the day. I'd lost all my profits that I made on the other trades. So that'd been frustrating. But again, we're only down $21. Even if I cut my losses right now, be down $3 for the day, that's not going to hurt me. It's not going to hurt me. That's why I'm recommending that as new traders, this is the way you trade. This is how you do it. Come in and just trade these small positions, dollar share stocks, and do some dollar cost averaging and for entry, manage your positions, and learn how to control your position. If we need to, we're still only trading small position size here. If we needed to start, doing some dollar cost averaging to build our position and draw that order entry, dollar cost average entry down some more to bring it closer to the market so we could get it to bounce above our. See, the whole goal here is we're a little frustrated. We're just trying to get it to bounce above our entry point so we can get out. And to do that, we can add on with more limit orders, and it keeps drawing that dollar cost average position down. Eventually, the hope is that it'll eventually just pop back across your entry point, and you can just take your positions off. Of course, if you wait long enough, and maybe you'll get a rally out of it. And maybe at this point we'd be crazy to hit the sell limit and take our profits off the table because we got 500 shares. And if the market wants to take off and start ripping higher, we'd make all kinds of money, right? But the video was getting long, and I was just like, I don't want to keep this video running forever, and I want to kind of tie this whole thing together for everybody. So I'm not going to keep building a position going down, down, down on this worthless market that doesn't seem to want to do anything today. But I've done it before. I've done it in the S&P and took my position down and waited. I had my entire account, almost my entire account put into the market one time. as the market kept it was unbelievable. It just kept falling and falling and falling, and I just kept adding and adding and adding and adding my positions, and I was worried I was going to blow my account up. Of course, even at that point, I was only going to be down I think I was down like $300, and I was just like, $300 isn't going to kill me. And I just keep moving more money in, moving more money in, moving more money into the market, just keep dollar cost averaging down. And eventually the S&P, I kept trailing down with a stop like this because I'm like, I'm really getting overextended here. Eventually the market popped back up and I ended up with like a $50 profit. So, it's just all risk and money management. It's how you manage your risk and how well capitalized you are for the position. Now, in that situation, if the market would never have, two things could have happened. One, I would have given up and said, well, I'm not going to keep adding more money to the market. And the market may never have come back and crossed above my entry point, and I couldn't have got out and reduced my risk and take my position off. And I would have had to take a bigger loss. Or I could have just kept adding on until I didn't have any money left. You've oftentimes heard me talk about gambling and comparing the stock market to the casinos. And the reason casinos have maximum bet sizes on their tables is because you could continually bet your losses, and if you were well enough capitalized, you could never lose. You'd never lose in Vegas. You could go to Vegas, and if they didn't have max bet size, you could go down there with $10 million in your pocket and just continually bet your losses to the point where you would never lose. Okay, look what just happened. We just got stopped out. The market finally popped above my entry point because I'd been dollar cost averaging it down, and I'm done. I'm just done with this dumping. What a worthless chart. So we're up $35. I got to be happy about that. We're up $35. All right. So what do we do here? Now we start looking for some additional opportunities to maybe get back in the market. Now this is a buy signal. It actually came in at a buy signal on this stupid market, Sonona. So I just wanted to sit and watch it and see, well, would I have been better off to hang on to it? Did this market rip up after I just got out, after I had that big drawdown all the way down from the morning session, clear down into the bottom? Is this where it's going to turn around now and start to rip higher, and I would have had 500 shares and built my whole position and made a fortune? Well, I sat here and watched this thing for the next 10 minutes, and I don't need to drag you through it, but it popped up a little bit right here, and then it flashes right back down, and I would have been underwater again and start having to build back up with a limit order. So we did the right thing. We got out. We reduced our risk. The S&P is dropping like a rock. Nothing really build up anytime soon. I turned off the video and turned off the software and started making this video for you. So I don't know what it did after this, but right now it didn't do anything. It just kind of flashes back down and went back down into a losing state. This market's just dead. It just kind of went sideways. But that's the disadvantage sometimes too. I mean, once you get your position up and you get your shares and the market starts to rally, well, you've been building a big downside position for so long, you feel terrible about yourself. You just take it off the table and get out. Well, that's when maybe, you're in the driver's seat. You got a big share size and the market starts to rally. That's what you've been waiting for. That's what you've been building this big downside position for. So if you can move your stop to break even and then to let the thing go, let it rip higher, and that's where you do the triple 29 and you start trailing up on the blue light system and the yellow light system, and that's a great strategy too. But that's not what we were talking about today. Today we're doing Christmas tree. We'll do those other strategies another time. This market is certainly not the one to do that on because it's just such a piece of crap market. Maybe if we'd have been over there on Cadman this morning and picked the right market, we'd have been doing better. But all right, I just wanted to flip over here. This is a screen capture and show you kind of how we traded today and what we ended up doing. Notice this, they're not all big trades. They're not big money amounts. So don't focus on the dollar amount. Again, we can increase the dollar amount. It's the strategy that's important. It's the strategy that I'm trying to get across here. And you can start with small share size and you can do this yourself. But you can see in the way we did this, not a single loser today, not one loss. We had a 100% green day today, not one single loser the way we did this today. Now, we can build on this. We can start to do a more sophisticated strategy. But this is just a good way to start trading, get yourself into the market, get your feet wet, and start learning the strategies, learning these Christmas tree strategies. Then we can add on and start doing the cat's meow and the king tut and some of these other things that will increase the dollar amounts. And then, of course, we can increase the share size. It's going to also increase the dollar amounts. But once you can get 100% accuracy or 90, 80, 70% accuracy, then you can start doing this for yourself and increasing the share size. All right, guys, that's the end of this video, and I hope you learned something. I hope you enjoyed it, and if you did, let me know. I'd like to hear from you. Send me an email if you have any questions, and get yourself a copy of Track and Trade if you haven't yet, and start doing this for yourself.